This is episode 44 of Spot On Insurance, your licensing and regulatory compliance guide. I'm your host, Ted Tavares. In the next two podcasts, you and I will be exploring budgeting for basic licensing and compliance in the insurance industry. If you find the Spot On series informative and educational, not to mention fun, share it with your friends. Want to stay informed and tuned in? Well then, don't forget to subscribe. You can find us on iTunes, Google Play, and Stitcher Radio. My very special guest today is Joyce King, Quality Assurance Administrator for Insurance Licensing Services of America, ILSA. She has over 10 years' experience in insurance licensing and regulatory compliance. She provides education and consulting to ILSA's clients across the United States in matters ranging from licensing and affiliation to filing and reporting in the surplus lines industry. Joyce, welcome to Spot On.
Thank you, Ted. Thanks for having me.
Let me begin with this question. As an agency owner looking at my budget for the new year, from a compliance perspective, what should I be aware of? From your experience, where should I direct my attention?
So to put together your budget for the upcoming year for your basic licensing and compliance needs, of course, you want to look at where are you licensed now? Are you still in need of each of those licenses? Are you in need of more licenses? Or possibly even less. So are you looking at expanding into new areas? And with that comes the requirement to get not only your agency license, but you would have to have individuals licensed not only as well, but really first, beginning with your designated producer. So we'll talk a little bit about designated producers a little bit further into the show.
So what are the steps I should be taking if I'm considering expanding to new states?
Well, if you're expanding into new states, and let's say that you are expanding your range of products as well, you are not just dealing with property and casualty products. Maybe you want to expand to the non-admitted market, surplus lines, or you need to expand into life, accident, and health. Starting with your resident state, more than likely, the first thing you're going to need to do is take some kind of pre-licensing education and then pass an exam. That's almost certainly with life, accident, and health. If you're wanting to get into LAH in your resident state, you're going to have to exam. You're going to have to take the pre-licensing before you can go for the license. With surplus lines, not every state requires that exam, but some do. So you just depending on which state is your resident state, you may have to do that there as well. But that's just to get started. That just gets you in your resident state with those new lines of authority. And then from there, you could expand into more non-resident states and those additional lines of authority. Once you've got the lines of authority in your resident state, it's pretty easy to go ahead and expand into the other states, getting those same lines of authority. Now, time and money could be a factor. Some states are more expensive to get into than others. Some states take longer to get into than others. So, whether you're expanding your range of products or not, if you're expanding into new states, you definitely want to take the time factor into consideration. So, for example, I call them the Big Five. These are the 5 states that it will take you the longest to get into compared to any other state, and for a number of different reasons per state. Some is fingerprint requirements. Other reasons could be that you have to get your business registration at the Secretary of State before you can apply for your insurance license. But those states are California, Texas, Florida, New York, and I just throw Massachusetts in there because it does take a while to get in there. There's a lot of consecutive things that have to happen before you can get an agency license issued in Mass in all of those states.
Is this another issue that you regularly have to educate your clients about?
Yes. Typically, when we're seeing that is from new clients that are just coming into our services. Maybe they just got into surplus lines, say last year. For example, let's say we're in 2018 now, but say they came into it in 2017. They were plugging along. They were selling all of this surplus lines business, not really knowing or understanding all of the reporting requirements that go along with it. So, here now they're in 2018, and let's say it's the end of January, and a few states' annual report is due, and they don't do it. They don't realize it's a requirement. They don't know anything about it. Because contrary to popular belief, the states aren't sending out notices for every single report that's due. you're expected to just know those things. You're supposed to do your due diligence and know when those reports are due. So, now they've missed some reports and they're getting these weird penalty letters and assessment letters, and they're calling us and they're saying, what is this? And, then we're having to explain to them, okay, you got the surplus lines license, to be able to sell surplus lines business. However, there is some reporting requirements that goes along with it. Even if they knew how to do the filing and submit the tax, there could still be a reconciliation report that's due at the end of the year, just to kind of notify the state and give them a wrap up of everything that happened related to surplus lines that previous year. So that's the kind of reports that I'm talking about. If you don't surrender your license, they continue to accrue. The reporting requirement continues to accrue. And then if you miss that reporting deadline, then penalties can start to accrue.
Wow.
Yeah.
Okay, we've already discussed expanding into a state, but let's hit the other side of the coin. What process do I have to look forward to if I plan to withdraw from a state?
If you are ready to come out of a state for whatever reason, any number of reasons could lead you to the point of needing to withdraw yourself from a state. At no time would I ever just tell anyone that it's okay to walk away from that license. However, we even have clients who are just say, you know what, I really just want to non-renew it or let it run off. And that's just the way they want to deal with it. However, my suggestion is always to appropriately surrender that license. You can let it non-renew, or like I said, some of them call it run off. But at the end of the day, the Department of Insurance doesn't necessarily know that you're no longer in that state. Or let's say it's a surplus lines license. The surplus lines associations don't know that you're no longer doing business in that state. So if you have a license that's not due to renew for 2 or 3 years from now, but you are ready to get out of that state right now, and I'm going to pick on surplus lines licensing. If that's the case and you want to get out of surplus lines business in a particular state now, but that license is not due to renew for 2 years, for the next 2 years, if that's a state that requires reporting, even zero business reports, let's say on a quarterly basis, those quarterly reports are going to continue to mount, even though you've walked away. The state, like I said, they don't know that. They're going to continue to expect to receive those quarterly zero business reports over the next 2-year period. If you're not turning in those reports, you can easily start receiving letters from the state where they're demanding the reports, and along with that, you're going to experience some fines and penalties, possibly even, especially where surplus lines licenses are concerned, possibly even administrative actions, and that's a whole nother problem that that you really don't want to deal with if it can be avoided. So, like I said, in order to avoid, want to just surrender those. That's pretty easily done. Some states have, a certain form that you need to fill out to do that. A lot of states will accept that kind of information on just a letterhead, a signed letterhead, that you're wanting to surrender the license. And, and along the lines of surrendering those surplus lines licenses, here's just an example. 3 states that come to mind right off the top of my head that will assess penalties on a daily basis if you don't turn in your, say, the annual return on time. 2 of them that I can think of assess a penalty of $25 per day, and 1 state that comes to mind assesses a penalty of $50 per day, Ted, and I'm not aware of any caps, so that penalty can continue to accrue daily until those annual reports are submitted to the states for the surplus lines licenses.
Do your clients run into this often?
Yes, actually, where they want to just, they tell us, no, just non-renew it. I'm not willing to spend the time or the effort to get that done. Honestly, Ted, I'll put up the argument with them, on the surplus line side of things that's just not the way to go. But at the end of the day, we'll do what they want. But yes, I have seen instances where the states have come back and said, hey, knock, where are you at? And why aren't you doing your reports?
Spot On is sponsored by Insurance Licensing Services of America. Need help with corporate name changes, annual returns, or surplus lines tax filings? Feeling overwhelmed? Well, if you are looking for experts in regulatory compliance, you've come to the right place. ILSA provides the industry with over 50 services. To learn more about the company and how they can help, visit ilsainc.com.
Joyce, in budgeting for this next year, should I spend a lot of time focusing on renewals, Or are there some other areas that I really have to keep my eye on?
So for clients who are, obviously wanting to expand, we're talking about they're going to have to build up a budget for new licenses. They're not typically going to see the renewals come back around for another year, and in a lot of cases, 2 years. Most, not all, but most licenses renew every couple of years. Well, there are some that renew annually, and there are even a few, very small handful, that renew every 3 years or every 4 years. But that's extremely minimal. Most licenses renew biennial. So for the renewals that are coming up in the next year, you need to have some kind of tickler system to keep up with the due dates. You need to be aware of what those state fees are.
Can I use my Rolodex?
You could. You could. I wouldn't suggest it. But, you give that a try and see where that gets you. I've heard of a lot of folks that like to use an Excel spreadsheet. In fact, a lot of people that come to us for, quotes for renewals or licensing or whatever, especially for renewals, that's what they give me. Of course, I can, I have the ability to go pull those licenses from NIPR, but they like to share their spreadsheet with me and say, well, this is how I've been keeping up with it, and that's fine and good. We, for instance, we're just completely automated. We have that ability to dump the license information in, and we've got the system set up so that, as those renewals come due, they're in our queue at the appropriate time. We renew about 45 to 60 days advance of the renewal date, so that there's no problem there. But, for anybody that's, like I said, wanting to work out their budget or work out their timing on the renewals, you absolutely do not want to wait till the last minute to renew a license, and you certainly do not want to wait till the last minute to take your continuing education. And we do run into that a lot, even with our existing clients that are, we track the CEs for them, and we tell them, you've got, X hours of ethics and X total hours you still need to do. We're staying on them, and they still want to wait till the last minute. And I'll tell you what happens there is, say they take those continuing education hours right up to the last day. The right. Renewals due on 12/31, and they finish those CEs on 12/31. Well, guess what? The state is not going to be made aware of that for 2 or 3 business days. So now we've got to go through, January 1 and January the 2nd, 3rd, 4th is probably right around the 4th is probably where the state would finally be notified that the individual has completed those CEs. Then and only then is when that renewal could be made available to renew. But at that point, since we've now passed the expiration date, there are a few states that will give you a grace period and allow you to go ahead and late renew. Not all. Some of them are going to cancel that license, and you're just going to have to reapply.
So that will definitely have an effect on my business at that point. Just those 3 days.
It could. Think of some policies. Maybe you have a lot of policies that have a 1/1, 1/2, 1/3 effective date. Maybe a lot of your business has effective dates somewhere in that period. You weren't appropriately licensed during those 3 or 4 days. Should you renew those policies? Absolutely not. You didn't have a license to do business.
What do I do then? Where do I go from here, Joyce? I'm lost.
I don't know, but now at this point, you're asking me things that are a little bit outside the licensing realm. That's more of maybe an ethics problem there. What you should do with those policies. My suggestion is just don't get into that situation. Take your CEs well before the due date so that they're reported to the state and so that you can renew your license on time. Because here's another catch. I mean, it can snowball. It can domino effect on you. Say your resident license is canceled because of non-renewal. And it just happens to be one of those states that you've got to reapply, and heaven forbid it takes a long time. They've got a long processing queue, and now you've got a significant period of time building up where you're not licensed in your resident state. Well, guess what? If your non-resident states are coming around to renew about that time, they're going to be canceled as well. And even states that aren't due to renew right away, They communicate. They all share NIPR. They all can see, all the states can see now what's going on in other states. So if they see that your resident license has lapsed, they can cancel your non-resident licenses as well. So anyways,
it leads to an immediate chain reaction.
It can. So again, my suggestion is just do your CEs well in advance of the due date. Don't get yourself in that situation.
I received some license copies at my office. What do I do with them?
That's another part of the budgeting. Once you've renewed your license, a lot of the states will put a new expiration date on your license. Not all of them. Some licenses are even perpetual. You don't have to renew them, and they're not going to have an updated expiration date. But for those states that do, that you do renew and they get a new license expiration date, you're going to want to go and print those. They're nice to have around the office to stick in a frame and put on the wall. But the main reason you need your license copies with the new expiration dates is to give that to your carriers. Your carriers want to see them at the end of the day.
Can you shed light on how business registrations can impact my expansion plans?
So in addition, whether you're expanding into new states or you're already in those states and you're having to renew your licenses at the insurance departments, you are likely also registered at the Secretary of State to do business in their state. What a lot of folks don't understand is they're expanding into those new states beyond just getting that registration to do business. There may be an initial report that's due, like an initial annual return. Maybe it's due within the first 90 days. Maybe you need to do an initial publication. For example, if you're an LLC, you need to do an initial publication if you're getting into New York. If you are an Inc., you need to do an initial publication if you're getting into Arizona. And no matter what you are, if you're getting into Nevada, you've got to do an initial publication. But beyond any of the initial registration and the initial reports, typically speaking, there's going to be an annual return due at the Secretary of State. And biannual, I do mean every year. There are very few exceptions. A few states will accept the return on a biennial basis. But that return just gives the state updates to your officer list, to your address if you've moved. If you're an Inc., you need to update your shares via that report. But that's something you're going to have to also build into your budget for the upcoming years. You need to find out, just like the license renewals, there needs to be a tickler system. When are they due? And then what are the state fees associated with each one of those returns?
So Joyce, how do I handle the corporate tax returns that will be due the following year as a result of the revenue from the states I'm expanding into?
Corporate tax returns, those are typically due to the Departments of Revenue. So once you've registered with the Secretary of State in a particular state, usually the Secretary of State and the Department of Revenue, there is some communication there. Some Departments of Revenue have a registration process at the onset. Right after you register with the SOS, the Secretary of State, you then need to turn around and register with the DOR, the Department of Revenue. Other states, you don't have to do an initial registration, but every year, and the hot dates are March 15th and April 15th. But much like the IRS, you can get an extension to September 15th or October 15th, depending on when your initial report was due. You can get a 6-month extension. Every year, you would need to turn in a report to the Department of Revenue concerning the revenue that you declare in that state. And many of those states require even zero reports. So if you're not declaring any revenue in that state, you may still have to do, or you likely still have to do, a de minimis or a zero report. Now, even with the zero reporting, you could still be required to pay a minimum fee. I know Connecticut used to be $250. It may still be. California is $800. Just for the privilege of doing business in their state. That's whether you declare any revenue in California or not. $800 is the minimum. So again, just you need to look up what those fees are going to be for minimum reports, and factor that into your budget at least as the minimum cost to continue to operate in those states.
Thank you, Joyce. My guest today has been Joyce King, Quality Assurance Administrator for Insurance Licensing Services of America, ILSA. Tell me, how do people get in touch with you if they need help?
My number is 800-729-6127. I am absolutely happy to answer any kind of questions regarding licensing, compliance, surplus lines, tax filings, anything I can help you with. My email address is j.king@ilsainc.com.
Joyce, it's been a pleasure. You've just been a wealth of information. Thank you so much for being part of Spot On Insurance.
Thank you so much, Ted, for inviting me today.